Hey guys, this is Simon doing a kind of a market preview for tomorrow, taking a look at the bigger picture. And really, the nature of these videos are going to change a little bit. Mostly, they're for my own input at this point and for um, also helping my daughter learn. So, a couple of things. First of all, this is for educational purposes only, nothing in the videos, the trading room, or on the Twitter stream should be construed as trading advice. I'm not a registered investment advisor, and this is purely for educational purposes only. So let's jump into it. So first of all, if we obviously had a pretty solid update today, I treat it as a Fed day. The best decision I made all day was not fading, and that worked out fine. So I want to figure out where the market's going to go from here, what the market has to do from here in order to have any kind of significant downside. So a couple of things. First of all, let's talk trend lines, basic, right? So basically, if this trend line is not broken, we continue to move higher. Number one, that's kind of 101. I'm covering that with my daughter right now, kind of converting bigger time frame trend lines to smaller time frame, right? So you'll see a couple of things. So first of all, we could not manage, and I don't know that this is or is not in any book. This is a bit of my own voodoo. We could not manage in this area a close below during the RTH, a close below 2027.50, right? So the first clue to me when I'm trying to figure out, well, when will this market be bearish? We'll close below 2027.50 will be the first thing that has to happen for me to think, hey, maybe we can roll lower, right? Number one. Number two, let me think through this process. Number two, this was last week's swing high, right? This becomes a potential trap point. What does a trap point mean? Very simple. It simply means that we've traded above. Let me grab my pen here real quick. And we traded above, failed, traded back below, and now that gives us the opportunity to shoot to what is currently the bottom end of the range around 2027, with intraday stretches down to 2020. 2018 down into this area, right? But in order for that to happen at this point, the best thing to happen will be to shoot above, get a 50-60 back up, and push back to the downside. Right now, I'm really not looking for that trade because shorts just aren't working very well. I will be aware of the pattern so I don't get run over to the long side if we do trap back in. But right now, buyers completely have it. We cannot do anything more than a 50-60 retrace, and that's a 50-60 retrace from the last swing. If you'll look, right, swing low, last swing low, swing high. We came back to the 50-60, right? You can see we opened right on the 62 retrace here, and we were never able to push back below. Buyers are firmly in control, right? You usually look, right, if you contrast that, you usually go, okay, well, where's the most reasonable swing low in this area? And I would look at two different points from where we launched last prior to this gap up, right? I would look at, normally would say, well, this would be the 50-60 that I would look at here. You can see we couldn't get to it. Or the 50-60 from this swing low back up, right? We obviously couldn't get there, and then you have the swing low all the way down at the bottom. And we can't get anywhere close, right? So buyers are still in absolute control. So this is really, really important, right? What it basically means is when the market's in this mode, I am sidestepping shorts. Now, in my own trading, it's making trading, I really have to balance this performance thing, right? Because I am skipping some shorts that are working, but I'm also sidestepping all the shorts that are getting absolutely run over and the move up. And the other thing that I'm doing is I'm conserving my mental energy. I'm not letting the market wear me down by fighting a strong upside move, right? And even though we've consolidated, if you look, this is the area where shorts had the easiest time this last 1, 2, 3, 4, 5, 6, 7. But if you look at the last 7 days in the RTH, all the easy trades have been, for the most part, swings from the lows all the way back up to the top of the range, and we've generally been in balance. We're still closed within this balance area, but I'm pretty sure tomorrow morning that we will open above this 2047.25, and that's going to let us come up and explore the open gaps above, which are sitting, I think one's at 2063, and there's another one up at 2072, I believe. That's off the top of my head, so please verify that, right? So the next thing I want to know is, well, what might it look like when it gets up here? So I'm going to go and refer to this old area up here. Let's bring it in just a little bit. Because what I want to do is paint a picture for myself of what the behavior might look like. So let's look at it from that perspective. So if we do that, and again, I would like everyone to verify all the open gaps on this, because for some reason the open gaps on the volume profile on TradeStation do not line up with the open gaps on the 5-minute chart, and I go off the gaps from the 5-minute chart. So first, there's an open gap sitting right there at 2063. There's another open gap sitting right here that was barely missed at 2071 3/4. Okay, we have the swing high sitting up here at 2090. Oh, didn't mean to pull that chart up. Let's get rid of that one. There we go. 2093.50, right? So what I want to know is, first of all, is it possible that we even get up to these old swing highs? And if we go back a little bit further, back over here, you can see this is really where we started this big roll down coming into August, back to the downside, right? So a couple of things. First of all, this was the last swing, right? If we kind of go through, I want to paint a picture of what this looks like, right? So coming into July, August, right? We rolled down hard. We made what was essentially a higher low, came all the way back to 2093, right? Came all the way back up again, rolled down one more time, made a slightly lower low, trapped back in, retested that, essentially double bottom here, and now we've pushed all the way back up, back to the top. Essentially what this is creating, right, if you're looking at a day time frame chart, you'd say 1800 is the bottom of the trading range, 2100 to 2070 is the top of the trading range, right? And I think, I want to make sure that I got that right. That is the high, right? That is currently the high right here at 2100 even, right? That 2099 3/4 is the adjusted June contract for the old high, which was previous to this. It was 20. I want to say it was 2122 or 2123, something to that effect. At any rate, we've rolled over enough contracts now. It's all the way down to 2100. So a couple of things. I want to figure out how high the market can go from 2047. So even when we were having these wide-ranging days, about 40 points was the most it could pull off on a 24-hour chart. Occasionally we got 50 points, right? So if we go 40 to 50 points from here, that puts us at 2087. That would be 40 to 2107. That would get us to new highs, right? That's possible, though no, not likely, right? On most days, we've been capped off by getting plus 30. That would put us at 2077. Okay, so let's go over here and look at what this looked like in this area. Last time we were in to get some clues as to what's going to go on in here. So I know that this is possible, right? So I know I have a couple of things that are going on up here that might help me get reversal points. First of all, the open gaps, one sitting here at 2063-ish. The other one sitting right here at 20, let's call it 71-ish, right? This creates a natural support resistance area, and I would expect, and the other thing, even without the open gaps there, right? You can see that once we broke underneath this 2063, we broke below, attempted to get above, attempted to break back towards the high, trapped back. So go, if you'll follow this with me, right? Because for me, it's important to understand how the market traded through here, right? So we consolidated here at this 2063 to 2071 area. We broke above, trapped back below, backside tested, rolled to the downside. Came all the way back up, right? Traded sideways in this 2063 to 2071, right? Attempted to make a break back to new highs, failed to do so, trapped back below, right? Backside tested again, right in here to 2063, 2071, rolled all the way down. Then we came all the way back up really to 2061, right? But came all the way back up, failed again, and then we came all the way back up and failed. So that's one fail, two fails, three fails, four fails. and it was a variety of attempted consolidation at or above to straight towards, when we got towards the end, straight up rejection out of that area and a move back down. So guess what's probably likely to happen when we get over here to this 2063 to 2071? We are likely to reject back downside again. So when we get over there, what will that look like? So there's a couple of ways that could happen. Ideally, we could so it could hit it. How would this look? So what we'd want to see up here for a fade, there's a couple ways to do it. You simply fade it first time in and hold the fade, assuming it's going to roll over. That's the most aggressive and the less needy in terms of what we have to see to get a setup for a rotation back to the downside, right? Option 2 would be to see, again, without having to overthink it, push up, rejection, 50-60 back up with a stop behind the swing high for a push back down. That's second option, right? Third option would be a push above, right? Fail to get rejection, shorts get squeezed, we push above, we come back below and push back up and reject back down, right? That's third option. Next option is we come up, consolidate sideways, break down, backside test the consolidation area, and then move down. And then there's one more option that you have to keep in mind, right? That we come up, we close right at the high, we gap up, backside test, and break out to new highs, right? Everyone's bearish on the market. That is a completely feasible possibility. And also you got to remember, this is to get up into this 2067, 2071 area, this is less than 20 points of rotation up, right? So you got to remember, unless it comes in, rejects out of it hard, and then closes below, this is, you know, we could really get a 30-point up day and have it close above. And in that case, what I would look for, right, is what did the P&L look like on this particular area? And I'm going to give you some dates so you can go back and do your homework. I'll do my homework later. But I would look at the, wow, why can't I see the date here? Let's see this. I would go back into November 26th, right? Because you can see we traded right up to this 2063, 2071 area, closed below, closed below, closed below, traded above, backside tested, pushed it, tested down, pushed up, tested down one more time, pushed up again. I'd go and look at what both the overnight and the 24-hour look like, and I'd also go look and see what it looked like when it closed below here into November 9th through 16th. I'd go and look at what it looked like when it consolidated here, right? What were the clues? What were the ranges in the first 45 minutes? And then I'd go and look at what it did when it was rejecting pretty hard out of this area. What did the rejections look like in December into early January of 16, right? Because we're probably going to get variations on all of these when we get up into this area. And in order to trade it well, you have to be able to recognize the price action and play with it a little bit, right? The last piece that I wanted to go over is if you look at how the market traded today, right? Sometimes, so someone described in a book I was reading the performance, right? That when you're a kid, you kind of, let's say you're walking a balance beam. And that balance beam can be, for most people, aren't as nice and wide. And if you have any kind of skill, you can play with it, you know, jump on it, stand on one leg, do backflips with it. But you can play with it and kind of get good at being on that balance beam over time as a kid. And as a kid, you're willing to do it, right? But the analogy was, is as you get older, you're kind of less willing to play with it because you're afraid you might fall and get hurt, you might break something, or you just aren't as limber as you were as a kid, right? So you don't want to do it, right? But the analogy to that trading is the same thing. When you're trading, you're less willing to play with the market, and then the other point that he had was, as you get better and better, and you gain more and more, skill sets at trading, you turn that balance beam into a tightrope, right? And as you're walking on that tightrope, you give yourself less and less room to play because you have to be perfect when you're walking on a tightrope, right? My suggestion is you play with the market and view the market as if you're playing with it, right? You have to have rules for playing with it, and you have to have things that'll keep you safe within that play, right? But if you don't play with it, you can't imagine it. You have to be able to imagine how the market might play itself out. So I'm going to go to today's price action and today's charts, right? So if we look at today's chart, right? First of all, we knew we had a narrow range. That's worked out almost every day in the morning to a push up to the top end of the range. And that's exactly what happened prior to our Fed speaker, right? Our Fed speaker was right here, right? Very narrow range. We pushed out, and you'll notice, obviously here, there was no, actually I need to check myself on that. Let's close this real quick. Hold on. There we go. That's why my chart looked a little bit funny. So if you'll note today, right, we came in, we had a small initial range, right? We attempted to break this uptrend line. There was no rotation. There was no volatility, right? We pushed back up. I was looking for a retrace. Let me get rid of the retraces. Just past midpoint. So looking for a retrace just past midpoint. I expected responsive buyers there. We never got it. Market pushed up, right? Never got the retrace. Traded sideways. No volatility. Again, if you're shorting in this, you had a very hard time. And then the market pushed Fed speaker, right? Came at 11:30. That's what this explosion is, where we moved all the way over to the other end of the range. And I was noting all day long from the beginning, NQ was leading. And when NQ is leading, ES tends to follow. NQ was leading out of the gate. If you look, while we were consolidating sideways, it was trending up. There was clear buyers long before we got to the Fed here today. And so the point that I want to bring up about this is that a lot of times people will get frustrated, right? You go, well, damn, you knew that we were likely to push to the other end of the range, and why didn't you just buy it? Well, here's the deal. You could have just bought it, right? There was nothing wrong with someone just coming around and taking the long here, as long as you were willing to take the stop all the way down here. But here's the fact of life. Most futures traders are leverage traders, right? And most of them are not willing to buy at 2025, 2026 and take your stop at 2018, 2017, right? Not leveraged, right? And ride this all the way through in a sideways market, which lasted, by the way, from 9:30 in the morning, actually earlier, 9 a.m., and we basically traded sideways all the way till the Fed speaker, which made this an all or none proposition unless you were simply willing to buy when we were unable to close below Globex low. The things that I needed to see set up for my trading did not ever set up. I was willing to be a responsive buyer. I was looking for responsive buyers down here in this 2022 region. If it should pull back in there, I never got that opportunity. And when I looked at the price action, I just kind of said days over, right? Second quality, Fed speaker. I generally don't trade on Fed speakers days. You can't get upset about missing a move, right? You got to know if you're upset about missing this, then you can't be pissed off when you take a long into the same environment and the Fed speaker says something and it swipes you for 20 points, right? That's calling it all or none environment. I would have taken a shot at this because I would have been out from a retrace from this 2025, 2026 area. I would have had a shot at long because I was willing to look for responsive buyers at 2022, and then maybe I would have left a trailer for a push up to the side. It never got here. Importantly, I followed my process, and I was also able to accurately predict what the most likely price behavior was and still not get upset, right? Because I'm going to play with the market type of mentality that the market didn't give me my in. Why? Because I know this generally leads to good trading days the following day, right? So at any rate, I know what I'm looking at. I know that we're likely, so long as we can hold the 2047 overnight, we're likely to trade up to that 2063 and then possibly up to that 2071. And then I will start from that area. If I can get rejection out of that area, I'll start working it. However, remember, and this is important, most of the rejection out of the top end of the area has come in the overnight session, not during the RTH. We are more likely to just simply hang up there and close up in that area. There's a lot of cash shorts, and I don't think there's very many bear shorts. I think they've already gotten blown out, right? But I think there's a lot of cash shorts and people looking for a reason to get long, and that could easily hang the market up, and it could even break us out to new highs. So anyways, that's my 2 cents. I hope the thinking helps. Again, play with the market. Give yourself a balance beam, right? Again, not too wide, but give yourself a balance beam to play with it. Be able to picture what the price action is going to look like, right? And and then know what your trade is, right? Understand what the price action has to look like in order to optimize your environment. And lastly, don't believe all the hype on Twitter and stock twits. Trading's not that easy. Not everyone's knocking it out on every single trade, and you find that out after you followed a couple of people around. It's hard to get consistency in all markets, and it's hard to be great in all markets. All you can do is hope to be good in some markets, and then find your market where you're really great at it. And when you see your perfect setup, when you see your environment where you really kill it, make sure you're on your A game when it gets there. Anyways, this is Simon. I hope everyone killed it today. I will talk to y'all later. Have a good night.